Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Friday, April 25th. After two consecutive breakout quarters, Microsoft reported an overall inline quarter with revenue of $14.45 billion and earnings per share of 47 cents for its fiscal third quarter. Piracy and OEM inventory adjustments in the quarter resulted in headwinds in the client segment. Gross margins were a bit better, while higher expenses dipped in the operating line. Cash flow remains robust. The main focus was client segment revenues, which declined 23.7% but gained 4% after normalizing for tech guarantees and the retail launch last year. The figure came in below management's guidance of $4.2 billion to $4.3 billion. The company attributed the softness to OEM on higher inventories from the December quarter, tough comparisons, and increased piracy in Asia. The inventory issue is likely one-time in nature. However, piracy is an ongoing problem for Microsoft. The most surprising figure was a 24% decline in Windows sales in the quarter, after the company itself predicted a possible 11% increase. Incidentally, PC shipments rose 15% in the quarter, according to industry source IDC. The culprit was piracy in China, which lowers pricing. SharePoint Server posted greater than 35% year-over-year growth. With Server Pack 1 coming out in June, we expect a better showing in the next quarter. As expected, server and tools came in strong on the launch of several products. The product upgrade cycle will continue to deliver double-digit growth through fiscal 2009. Entertainment came in ahead as Microsoft shipped 1.3 million Xbox 360 consoles, mainly driven by OEM restocking following supply issues. Now, the forecasts are really what Wall Street is focused on. After two upside beats, Microsoft's guidance has increased fears of a possible miss in the quarters ahead. For the June quarter, the revenue guidance was roughly in line at between $15.5 billion and $15.8 billion. However, earnings per share was lower, indicating lower operating margins. The June quarter is typically higher in terms of cost for Microsoft. Microsoft forecast earnings in a range of 45 to 48 cents for its fiscal fourth quarter. Analysts have been predicting 48 cents. The fiscal 2009 guidance was for between $66.9 billion and $68 billion for revenue and $2.13 to $2.19 per share in earnings, versus consensus estimates of $66.5 billion and $2.10 respectively. While Microsoft faced some challenges in the quarter, it does not distract from our enduring positive view on the stock. Microsoft is currently in the midst of its strongest product cycles in years. The transition to Vista is likely to take longer than prior upgrades, but we think investors should capitalize on today's weakness to add to positions. As for the Yahoo deal, the deadline is set to expire this weekend. Microsoft continued to rule out a possible increase to its bid, which puts the options at trying to elect its own board members or walking away. This bid has essentially turned hostile, and we don't think Microsoft will walk away. We are likely to hear its intentions in the coming week. For the record, we must note that Briefing.com has a business relationship with both Microsoft and Yahoo. I'm Pat O'Hare for Briefing.com. Thanks for listening.